Welcome to the 1 o'clock session. I'm Heather Landy. I'm an editor with Quartz in New York, and I really appreciate you all being here. We're here today to talk about digital asset transformation in global institutional capital markets, which is really a mouthful, but I think you can, I think it can probably be boiled down to when is Wall Street going to finally figure out blockchain. So whether we're talking about native digital assets like Ether or institutional grade utility and security coins, tokens that are in the pipeline, potentially with some pretty major support from institutional trading architecture. So joining me on the panel today, we'll go from my far right down back to me. Michael Zelkevic is the head of Oliver Wyman's financial services practice in the Americas. Tim Grant is the founder and CEO of DrumG, which is a fintech that's building distributed ledger applications for the regulated financial services industry. And Emmanuel and Aidoo is the head of digital asset markets at Credit Suisse. So I kept their intros rather short. Their titles are probably pretty self-explanatory, except for maybe Emmanuel's. And so why don't we start with you?
Mine was really self-explanatory.
Well, what exactly is, these days, a head of digital asset markets at a major financial services firm?
Okay, so before this role is, I think I'm 12 days in. Thanks for the volume. 12 days into this particular role, but 4 years leading up to it, I've been the head of blockchain strategy at Credit Suisse. So I think for us, it's a natural evolution as we've been, using blockchain, deploying it, embedding it in some of our, we're past the POC phase. We're actually going to go live this year with 3 of our projects. We have a big portfolio. We have pretty much a project in every asset class that we care fundamentally about. But I think it was a natural extension for us to start thinking not just about how we can use DLT as a cost-saving mechanism. Of course, we still are doing that and we're focused on that. But we've trying to figure out how to commercialize, and some of that will undoubtedly be around tokenizing, traditional assets, tokenizing liquid assets, etc., connecting to many of the exchanges that you've already heard about that are launching digital products. So I think that's the trend of traffic. We believe that I don't put a date on it, 5 years, 10 years from now, all securities, because digital assets really focuses on regulated securities issued in a tokenized or a digital form. If that's going to happen in the next 5 years or 10 years' time, we should start learning about that now. We should start trying to build infrastructure for that now and get the benefits from the early adoption.
Michael, would you say that the major institutions are gravitating to blockchain begrudgingly or enthusiastically here?
So I'd say enthusiastically. I mean, the very first project I did for a major financial institution on blockchain technology was 7 years ago. And if you think about a lot of the consortiums, a lot of the early players in the space, they were all either seeded or participated, or patents were taken on this by all the major institutions. But I think I'll pick up on the point Emmanuel said. It's been so far as more of an evolutionary journey. It's not that you have the categorical use case that would say tomorrow everything changes. So people have been very patient investing in this. Everybody has, all of our large clients have several pilots that have been successful and are kind of slowly moving to the now rollout stage. So, but it's been a very patient journey that actually I don't think the industry gets enough credit for.
Yeah, patient or maybe slow, depending on how you want to look at it.
I'm definitely going to challenge that because I think back to when we talked about this earlier, when I first got into this technology, it's actually 2014, which apparently makes me a veteran. It's only 4 years in, and when I think back to other technologies that we consider to be emergent, they've been around for over a decade. We're talking about cloud technology as if it's some new thing. It's been around for a very long time. One of the big things that we talk about in banks now is RPA, robotics. When I'm a software engineer, that was called screen scraping in 1995. And now we're using it as if it's something completely new. So I do take exception to this idea that 4 years into this journey, every system in our infrastructure should already be on blockchain if it's so good. It's a fallacy. It will take time. We're 4 years down the road, and you know, anyone who tells you that this thing's so great, why haven't we got there yet? They don't understand the complexity of how financial services works, how it's knitted together, and it's a complicated system. And it's regulated as well, so you know, we want to do things in a really careful, considered way.
Is regulation, Michael, the main sort of roadblock to the industry moving even faster on this, or are there other roadblocks you see?
I would say it's one of the many. I would say the adoption here is the technological complexity of blockchain technology. Maybe let's think of it as that's maybe one part of the puzzle, and the remaining 4 parts of the puzzle is everything else. And the other one of the many dimensions is regulatory stuff. And if you think about only over the last 5 years have governments finally come out and came up with a legal framework. I think it's not consistent. The U.S. treats it somewhat as a hard asset. Other countries cover it as a virtual commodity. Other countries treat it as a currency. But even just legally defining what it is and how you can handle it, of course, that has ramifications for regulated industry like banking. Same thing, some of the technology linkages. I mean, it takes a long time to, the legacies that you're dealing with. These are institutions that are, built 100-year legacies. They have systems from 30, 40 years ago. If you want to migrate anything, it takes at least sort of 9 months to a year to achieve anything.
And then there's the regulatory issues too, right? So we need corporate buy-in, we need proper regulation, we need a legal framework. What about the technology itself, blockchain technology? I'd leave this open to any of you. Is it there yet? Is it really ready for broad adoption at the institutional level, or are there any sort of kinks left to work out?
Well, it's definitely there. The challenge, I think, that we're seeing in this industry is people are making bold proclamations about large pieces of infrastructure that, I mean, it's kind of what you're saying, right? Like, we're not going to get all bonds on the blockchain by the end of the year because that's a multi-year, multi-billion-dollar journey. And arguably, the state of the art in performance and scalability isn't where it needs to be for that outcome. But it'll all converge in 5 to 10 years. It will actually happen. What's really exciting, though, is that there are real use cases that deliver business value that are now coming online. There are plenty of examples out there.
Do you want to walk us through a few of them?
Yeah, well, look, DrumG is an extraordinary company that I happen to know well.
No bias.
But just lay up there. So we, as an example, we're building a couple of networks with real big financial institutions. Credit Suisse is our anchor tenant on one of them. One of the biggest hedge funds in the world is our anchor tenant on another one. So these are the biggest financial institutions in the world, and to get something in the door in a Credit Suisse or one of the biggest hedge funds in the world requires, you don't just knock that up in a couple of weeks and switch go, right? This takes arguably years, actually. But the good news is that the path is starting to become clearer. Like we're blazing a trail in many respects. A lot of these new technologies haven't been deployed at scale. And it kind of raises interesting questions, and it's a bit like how cloud was, to your point. Cloud was not adopted for years, not because it didn't work, but because the banks were scratching their heads trying to figure out about the whole privacy and security component to it. Now they've sort of got their heads around it. Now we're throwing another curveball at them by throwing blockchain at them, which is even more complicated than cloud. And it's just a natural part of the evolution in the space. Another example is Comgo. Sophia's sitting over there. Like, that's a great example of a trade finance network on enterprise Ethereum. Again, some of the biggest institutions in the world. And you've got a portfolio of, I don't know, a dozen or so, and that's just Credit Suisse. Like, you mustn't forget that there's been, in the 4 years, like hundreds of millions of dollars thrown into this. That's pretty significant. Either we're all completely bananas, or there's something real here, and I think there's something real here.
An extension of the debate over the technology is this issue of public networks versus private networks and how the institutions will come into the space. Can you just kind of give an overview of that debate, Tim, and where you see things shaking out?
It's interesting. So when I came out of financial services, was at a hedge fund at UBS, and then went into R3, one of the big consortia. And the idea of talking about a digital asset early in the sort of the evolution of the space was just taboo. You couldn't talk about Bitcoin and Ethereum in a big, highly regulated bank. And now we're starting to see a kind of an odd change where you've got Emmanuel, who's head of digital asset markets, right? Surely we're now embracing this, but it was not that long ago.
Do my disclaimers now then.
Yes, okay. Not that long ago, it was just not even considered possible from a regulatory perspective. And now we've sort of evolved, I think, quite dramatically to a point where the frameworks are starting to support a very genuine move for business processes at scale in this space, which is super exciting.
I was going to say that because she said the inference of my role, of my title, and then public networks, I think it's important that we understand or we form the right taxonomy so that we can describe what is a virtual currency, what is a digital asset, what is a network, what is a protocol, and they're all slightly different. So, I think, crystal ball gazing as to, I think everything will prevail. I think there's a use case there for whether it's public networks, private networks, hybrids where there's connectivity, particularly not just financial services, but in other sectors and other industries. So I think it's still too early to call. It's just like in '95 when the internet, or '93 when the internet was born. Who would have predicted Netflix? Who would have predicted some of the companies that are thriving now? And I think it's very, very similar to what we're going to experience with this technology. And with the networks and the protocols, and there's some of the public networks have got some challenges to iron out, whether it be speed, whether it be anonymity when it comes to financial services, which is something that's not conducive.
KYC,
AML, OFAC. These are challenges that will stump any bank trying to figure out how to use these platforms. And then, I was talking to a few entrepreneurs yesterday, and it's things like, when they're thinking about tokenizing or token economics, they're thinking about the price of the volatility in the prices of the coins that they're trying to use. So there's some challenges to work out, and I think we'll get there over time.
Well, it's an interesting, very specific example is the new exchanges that are coming up. And when you really think about it, it's so interesting. You're talking about, RSX is a great example, which has got the likes of NASDAQ and Fidelity on their board of directors and as shareholders. So the biggest, again, back to the biggest institutions in the world. And why did they back it? Well, because they believe that coins and tokens, assets which exist natively on public chains, are going to be traded by the largest, sort of most heavily regulated institutions in the world. That's now happening. That's very real. So suddenly the idea that, not that long ago that public was taboo is now basically by default being embraced by the very same institutions. It's sort of an interesting evolution, and there's many other examples. RSX is just one. And that's the sort of, now we're getting to the point where you're getting these large pieces of essential infrastructure that are needed to create genuinely liquid, institutional grade, secure, regulated markets and digital assets. It's no longer a theory. The money's there, the companies are building, they're going to deliver in 2019, and then you've got other pieces like the collateral side and all these things that in any other market, you have to start piecing these together. Well, now the roadmap is clear. So the public-private debate is sort of just like any other religious debate that you get a lot of in blockchain. It's just a bit of a waste of time. How about you just find something that delivers business value? It's public, it's private, it doesn't matter. It delivers business value.
Michael, did you run away?
No, I would agree. I think, in reality, I think actually the use cases will sort of prove themselves, and we'll see where it's going to go, I think.
Yeah, and bigger picture, I mean, clients must be asking you, what can I do on blockchain that I can't already do? How do you answer that?
Well, I'll say it's a little bit personal. I think it's a little bit false to some extent. It's true that pretty much there's nothing that you can do on blockchain that you couldn't do in the analog world. But, you could say the same thing. Why do you need internet? You could communicate before without the internet, and it's true to some extent. Sending messages or talking to people or exchanging images, you could do a hard copy too. So I think here it's more, can you do things more efficiently? Can you do it in a way that, the cost of doing it or maybe the speed of some of the transactions? If you think about how trade finance is done today, there's a lot of paper a lot of people manually reconciling things, looking for paperwork. You could eliminate a lot of that. So I think there's value, there's promise in that. So it's not so much that it's something it couldn't absolutely do before. And I'm sure actually 10, 20 years from now, we'll find some things around some of the microtransactions, some of the atomic transactions, that those things will be new. But it's probably too early. I think they will come probably in the second or third wave.
I get that question a lot. And I actually like the debate. I like it when it comes from somebody who says, particularly in financial services, who says to me, I don't believe in blockchain, as if it's a religion. I don't believe in blockchain. There's nothing, that kind of question, there's nothing that it does that we can't do today. And they're absolutely right. There isn't, it doesn't do anything different. It just does it better. And, you know, and I enjoyed the debate because I started getting in some of the numbers. And, you know, and then you see them slowly, the cogs start turning and they realize, oh, actually there is some savings, because what we do to process is massively inefficient. And if you don't, you know, it should work at the micro level, and it should work at the, you know, you can try it at the scale level, big numbers, and it should be frictionless no matter which end of the scale you're at. And if you can pass that test, then you don't need to change anything. But if it doesn't pass that test, then you should look at how to tweak that model and, you know, make it more efficient. And this idea that, I'm going to be careful now, the CCP model is the right model is also likely a fallacy, because it's inefficient. And that's what people will like. So central database, CCP, but you're reconciling to it. You're actually, the cost of reconciling to it is really expensive, both in capital and in human capital. You know, reconciling to it. So once you get into the numbers, make the use case, it becomes, the way I don't want to hug the mic, but it's really easy. It's right. It's ROE, and that's revenue minus cost divided by capital.
So, you know, we all started with the efficiency play, and that's part of it, right? That you can do it faster, cheaper, better. But what's really interesting is the way that financial services, and I don't know about you guys, but I've only really noticed this in the last year or so, that the banks are starting to recognize that there's different ways of doing business. It's not just an efficiency play. Mm-hmm. It's not just that I can save 90% on this particular cost base. As a very real example, we had a meeting of all of our banks in our network that was led by Credit Suisse last week. And you remember there was an MD from one of the big banks who kind of emphatically banged on the table and said, "We want our data back."
He literally did bang on the table.
He literally banged on the table. It's this MD from 200 West down in New York, and it's a big deal, right? So let's unpack that a little bit. What's he saying? Well, as an example, right now, market data in financial services, they basically give it to Bloomberg and Thomson Reuters and everybody else, and they buy it back, which is a really crappy model, whatever way you look at it. But it's sort of been that way for 20 years, and that's just the way it is. Now, this new paradigm facilitates ownership, not just provenance, which is where everybody latched onto at the beginning, but now actual ownership, and the digital asset isn't actually a security, it's a mark on a price, on an OTC security. That's still an asset, that's still valuable, and they should own it. And so now, and I think there are many of these new types of ownership networks springing up, you've got this new mindset, which is, well, we actually don't need to do business that way. That is where the real promise comes out of all of this. And yes, we need the thin end of the wedge, which is to get Emmanuel's bosses comfortable that we're going to save money within a year, which is pretty much what they need to see. But 2 years from now, 3 years from now is where it gets really interesting.
This is a bit of a tangent, but it occurs to me listening to you talk. This reminds me very much of the debate over diversity in financial services, where, you know, we went from years and years ago just saying we should do it on the basis of it being the right thing or a nice thing to do, to, you know, the last few years it's been the business case and you know, better returns, and we can prove it. But actually, I think the real promise of it is that it's you can do business in a whole different way if you truly embrace this stuff. All I can say is that diversity battle has been a very long and uphill one, so I wish the blockchain folks good luck. I hope you have an easier time. But, okay, now that I've taken us completely off track, the outlook for crypto generally and where it's headed, Emmanuel, what do you think the likelihood is that we will see a fiat-backed stable coin at some point?
Well, we already have them, right? they're already there, but it's an essential. It's the essential ingredient, because I think many of us in this industry, banks, have projects that focus on digitizing the asset, and 85% of all transactions have a cash leg. So if I want to swap myself from, I don't know, IBM to Apple, may say it's a better trade, I don't know, but if I want to do that, what I'm actually doing is I'm selling IBM, getting cash, taking the cash, and buying Apple. So I've actually got two cash legs versus the trade. I don't do the DVD, which is the IBM to. So an essential ingredient is going to be digital cash. Now, I think, central banks, and I've been in several conversations with them about this. I think there's some concern maybe around, e-money at retail, because it's if they take things to the end result, which is, what if a bank is totally capitalized by deposits that clients can just you can decapitalize a bank in seconds, So I think they worry about that, but at the institutional level, I think they're much more open to the discussion, and I think we back a project called USC, Utility Settlement Coin, and I think that particular consortium is trying to effectively have a digital token backed by money held at the central bank. So it's this interesting. It's an interesting paradigm, because effectively the money, the asset, has the risk profile of central bank money. Today, when you put money in a bank and the bank goes bankrupt, you don't realize that you've actually got a claim on the bank, which means that the money wasn't really yours. You're taking Credit Suisse risk, you're taking UBS risk. Well, what you really want to do is take dollar risk or Swiss franc risk, central bank money instead. And USC is one of the only projects I know that actually allows you to do that. So it's, your question was actually quite simple. What's the chance of seeing one this year? I think you'll see something this year.
Fair enough. It's interesting, back in the dark ages, by which I mean like 2013, the Federal Reserve put out a paper on the U.S. payment system and what it would take to modernize technology that basically dates back to the era of disco. And, crypto, it seemed to me, solves a lot of the problems that were raised in this paper. So, wanting real-time or near real-time settlement, cost reduction for cross-border transfers and the like, and there were several other boxes that blockchain would tick. And I really thought at that point that blockchain was primed for quick adoption, and was actually the far more interesting story. I'm a journalist. The far more interesting story to follow than crypto as a currency use case. And then somehow the currency took off, and everybody stopped talking about blockchain, it seemed. We were all focused on the current, well, not all of us, but many people were focused on the currency use case. And here we are talking about blockchain again. And in fact, there's like a whole day of programming here talking about how the institutional adoption of blockchain. Do you guys have any thoughts just on that back and forth, that push-pull, and whether crypto is a blockchain story or a currency story, or should it be both?
I mean, there's a little bit of both. I would say I'm more in the blockchain technology side. I think it's fundamentally that's will be more important for this kind of some of the second order impacts that we talked about. It's difficult to get in the way when you get a parabolic rise. I mean, I felt the same thing. So when you the first project for a senior management of the large banks downtown New York, we kind of told them the same thing. It's about the technology. And then 1 year later, my cousin actually started day trading, blockchain, and made a lot of money. At one point, just kind of writing the whole thing. So I guess people get excited. That happens. Those kind of booms come and go. But I think the technology impact will be much more important long term.
I hate to use the word slow and steady for something that's been 4 years, but the blockchain has kind of been slow and steady. The cryptocurrency piece has been running around it. They're actually two different stories, but highly connected. They have the same origin. Ultimately, I think it's funny. 2 years ago, we started getting lots of institutional clients asking about crypto. We were focused on blockchain, but it's our clients. We talked to them about it. They kind of waned off a little bit, and then the family offices and ultra high net worth started asking about it maybe 6 months after them, and then they kind of peaked off after the drop. Consistently, though, people have always asked about what are we doing around blockchain and how is it going to make us efficient. And then oftentimes play the guessing game of, because really, if you want to invest, you want to make money in blockchain, then that's really a PE play at this point in time. And it's really a guess as to, it's much easier to figure out the shorts actually, rather than the longs. But there's no timeline for the longs, for the shorts. We don't know if it's 5 years, 2 years, 10 years. So that's been the interesting kind of parallel to what we've been really focused on, which is the blockchain story, making ourselves more efficient from a industry perspective. Well, with the deepest respect to your profession, Heather, over there in the press.
Here it comes.
We've sort of, choose my words carefully, we're sort of victims of it's a bit of a strong word, but we're victims of the news cycle. If you were to read the news and sort of take it at face value, the story changes every month. And if you get one piece of negative news, then that's the end of blockchain. It was all a hype, and it's all made up, and all those hundreds of millions of dollars was a waste of money. And then the next day, it's like, it solves all ills. But actually, what really matters is the underlying trend, and the underlying trend among regulators, central banks, technology companies, educational institutions, and all the different shades of financial services in every jurisdiction, everywhere in the world at this point, has slowly but surely been working on this for more than 4 years. It's interesting we talk about the central banks, because in many respects they were early out of the gate. I remember starting the project with the Bank of Canada in early 2016, the Monetary Authority of Singapore, Project Ubin, I remember starting that in 2016, and then where did they go? Well, the reason they came out of the gate strong is because it was so obvious, to your point, right? It was like, well, that's going to solve everything.
Right.
And actually, it was just a bit too early. It wasn't ready. That's okay. It's only been 4 years. It's probably ready now. So, the trend is one of slow, steady. I think that's right. It's slow, steady, consistent work underneath the covers. But, if you pay attention to the news, you'll get a different story every month.
So it's easy to underestimate the complexity of the operational aspect of some of these things, right? Like, we all have Apple. I'm an Apple household. I see the Apple there, right? But when somebody hacked into my iTunes account, right? I call Apple, took a week later, says just, we can't really fix it. You can shut down, they can open a new one. All records, everything got lost. And I imagine if your bank did that, said, forget your oil account, all money's lost, we restart again, right? You would go bananas. That doesn't happen, right? Like, actually, those kind of things are pretty, we all take it for granted. Now you're trying to replace the same level of fidelity of operations with new technology. That's not going to happen overnight.
I'd love to open up questions or also just statements from the audience. I presume we have a pretty educated bunch here, and if there's anything you heard on the panel you'd like to push back on, or maybe grab the mic, and if you want to state your name and affiliation, feel free.
Of course. Hi, everyone. My name is Avia. I have a blockchain law firm based out of Tel Aviv, working mainly in Europe and Hong Kong. So I'm witnessing my background is in, financial services companies before blockchain, and I love the combination of the two. And I'm seeing a very interesting trend of securitization, the old way, of unbankable assets and of crypto assets. And my question for you, I would like to hear your thoughts about, so basically securitization the old way sort of impedes maybe the progress of the digital assets market, because we're coming back again to the same markets that we know already, right? Certificated securities, and what are we changing basically? So, but I do love that trend because it gives you a good way to bank unbankable assets. How do you see the best combination of securitization the old way and crypto and tokenization?
That's a great question.
Yeah, if you, it's funny, when I was talking to our head of securitization, and he was, normally when I talk to our business leaders, I'm normally doing an education, telling them what is blockchain, what's the art of the possible, and they absorb. He was ahead of me, actually. He already knew about it. He'd done some reading about it. He was very, and he said basically, tokenization is securitization, but only securitization was 25 years ago. I think we at CS believe that we are one of the leaders in securitizing asset-backed securities, residential securities, and CMBS too. We're really good at it. So it's kind of natural. Again, this is why the digital asset markets role makes sense. What we can take some of that knowledge and learning is that what was, you take a basket of mortgages, put them into a QSIP, which is effectively the token, and you're off to the races. It's very, very similar. So if anyone doesn't know that business model, just go look it up. And but you're absolutely right. I think it allows us to look at how we now can stream income streams from previously unbankable assets in a new way. What changes is we're going to a ledger-based system, not a certificate-based system. I think we'll end up with different custody, because one thing that every single one of these protocols has in common is they have a private key, and so now guarding the private key is quite important. As you're a lawyer, you'll know one of the things that you cannot do with a security is when someone's lost their key, tell them it's tough luck. You have to, if they tell you that they own the security, you have to reissue that security. So we have to challenge ourselves in terms of the current protocols to build those types of what we call them fail safes in. Well, yeah. If you issue something today and the person lost their key, your answer cannot be like. So there are some issues that we have to work around in order to make this work in terms of our current legal structure, and also our custody and the other parts of the ecosystem that change. We also think about some of the differences around this asset class that trades 24/7, 365. How do you manage that? How do you manage the risk on that? So there's lots of other things that we have to think about that I won't delay us, but will cause us to make sure that we build an infrastructure that the entire ecosystem can use and support.
I've got a fun story. Just reminded me of a fun story. So just over a decade ago, September 14th, 2008, I worked for the other Swiss bank and was running what was called the workout group at all the toxic real estate assets. And I got a call from the group chief risk officer at UBS about 8 o'clock on the Friday, and he said, "What's our exposure to Lehman Brothers?" 48 hours later, I got a spreadsheet, and we sort of thought it might be in the region of 9 billion plus or minus 2 billion. That was as good as we could get. And we never really got any better than that. Why? Because there was all these different toxic assets with wildly different structures, different paperwork, different systems. We didn't know. UBS just simply didn't know what risk it had, which is mind-blowing, right? Now, fast forward, it's 2016. Young Grant has been called by the President's Council of Advisors on Science and Technology, President Obama, I hasten to add. I wouldn't do it if it was the other guy. And so I got asked to talk about blockchain on this President's Council of Advisors. And it was pretty early, it was early 2016. This is all on video, by the way. You can go and watch me freaking out about. Now, the interesting question was this sort of really professorial African-American, it was literally some sort of academic with a big beard, and he sort of asked...
I'm going to go watch this video now. I'm curious.
This is all true, it's all true. And he's stroking his beard and he goes, "So, Mr. Grant, could we have saved or had a lesser impactful financial crisis with blockchain?" And I remember going, "Oh, no, I haven't thought about that. We hadn't gone that far in our thinking yet." So I made something up on the spot, which, as you can tell, I do a lot. And but that set off a lot of sort of the answer is yes. Why? Because if we use this infrastructure to securitize everything, the look through to understand where everything is and what everything is, should have allowed me, when I got that call in 2008, to press a button and know instantly, not plus or minus 2 billion, but like exactly and without question. And that's what's at stake here. That's actually a much bigger issue in terms of financial stability than a lot of the efficiency gains we might be talking about. But you're right. That's what's going on here. That's where we can hopefully get to, and maybe we won't have such a big crisis in the future. I'm sure it'll be something else, but not that one.
Actually, a little better than that, Tim. It should be mark to market in real time, and it should be on the dashboard for the CEO to see.
Yeah.
Okay. Happy to run the mic.
I agree.
Yeah,
We'll build that for them.
Here, go over here.
It's Henry Arslanian. I run PwC's fintech and crypto practice based in Hong Kong. Just on following up what Joe was mentioning on this point, one thing, and I'd love to get your views on it, is when we talk with traditional financial institutions, obviously everybody has this conversation on blockchain last 2-3 years. It was very sexy. It looked good as CEO speeches. But as you mentioned, it was all POCs, nothing moved forward. In many cases, there was a cost reduction or a risk element to it, right? Right now, what we're seeing with our crypto assets, we're actually seeing in many cases move faster because it's a P&L driver, right? If it's trading, it's securitization, it's custody solutions, prime brokerage. Do you guys think that actually may happen, that we may see actually crypto assets drive the move faster into traditional financial institutions than rather a blockchain, as we saw like 1-2 years ago?
I'll answer because, I still want to do the taxonomy thing. I don't know if you were in the room when I said that. I don't know whether or not global financial institutions will be embracing crypto. I'm going to define crypto by public virtual currencies as opposed to digital assets. We distinguish. So I think if the question is, will we have tokenized real-world securities trading, on a blockchain soon? The answer is likely very yes. Will we be looking at Bitcoin, Ethereum? Name the top 20. I think the jury's still out because of three fundamental things that have to be solved, which is KYC, AML, OFAC. So, no, he's shaking his head. You can't see him. Those are real things that we care about. We are at CS, for instance. We do not have a federated AML KYC policy, right? So, in other words, I get this a lot when I'm in Zurich, when I'm in Switzerland. It's like, well, Switzerland's it's a crypto nexus. We know they really like crypto here. What's up with CS? Well, the difference is we're a global institution, and what we can't have is the DOJ taking a view of something happening in Switzerland and the entire and penalizing the entire AG for it. And that's how most financial institutions kind of view this. So you will find pockets of local banks adopting, but global banks just won't just yet. And that's why I'm like, you can shake your head, but it's real.
No, I was kind of add to that. I mean, you look at HOA, but ultimately, it's the U.S. dollar system. The U.S. government exercises its right to use it as a way of enforcing its foreign policy. It comes to trade sanctions, all those things, and they are more than willing to, and they have extraterritorial laws they cannot apply, and there's nothing you can do.
I'll give you a side story just to show how this works, and I'll be careful because I know it's been recorded, but recently the US government decided that Iran wasn't honoring its sanctions. So they asked SWIFT, which is a Belgium-based company regulated by the ECB, to switch off the Iranian banks. So SWIFT initially said no. The ECB said, don't worry, we got your back. Then the pressure came back via the bank saying, oh, you know what, if you want to play that game, well, maybe we'll remove your licenses. Guess what? The Iranian banks are off of SWIFT. So you can see how that pressure can come, from the US. We understand it really well. So, yeah, we have a global AML, KYC, OFAC policy, not a federated one.
I think it's a good question, man. And look, if there's one thing we know about financial services, is that they love profits.
Oh, the
right?
second part of your question is really good, actually. Because
Yeah.
I tell you what, the projects that we're going through, we've got something called new business, which is when we're going to launch something new, where we've come up with revenue ideas. They absolutely go quicker through our new business process than the kind of the cost-saving piece. But that might also be because they're using the old legacy infrastructure in order to execute much of that. So they're tokenizing, but they use the same booking systems and everything else. So provided that framework's okay, they're able to launch. So there's this. I think the front can move quicker than the back because it's time to market, it's agile, and that's probably why we see it. It's maybe a function of revenue, but it's more likely a function of the ability to leverage legacy systems to achieve the same end in a short period of time.
Good afternoon. My name is Dennis Pitcher. I'm the FinTech advisor to the Premier of Bermuda. And I just wanted to ask what jurisdictions like Bermuda can do to accelerate adoption of digital assets and this industry.
I should probably talk about that.
You're the
Thanks for the layup.
expert.
Firstly, big up Premier Burt, David Burt, on the circuit. He's floating around, I think, it's somewhere, isn't he?
He'll be here tomorrow.
He'll be here tomorrow. Funny story, I was on the plane on the way up and I got an email from Premier Burt saying, "Are you going to the World Economic Forum?" It's like, that's a strange thing to get. And he's like, "Oh, he's sitting behind me." He was actually on the plane. It was quite funny. You're there. So look, the importance of small but regulated and highly credible nations like Singapore and Bermuda as just two examples is huge, because we all know how hard it is, especially in the US and in Europe, to get anything done. It's just so many, just a lot of bureaucracy, a lot of different agencies, a lot of people, you have a lot of stakeholders you have to get around the table. What I love about, and Canada's a bit like this too, is you can kind of go in to Bermuda and get all the decision makers and policy makers, and HSBC is a big bank that's there as well. So you've got large, the biggest insurance companies in the world, and all the big services companies have a big presence there as well. So you've got all the pieces you need to actually enact change. And when you've got a progressive government like the Bermudian government who's putting in legislation, and there are other jurisdictions doing it too, but I think they've been pretty quick and very incisive on what it is, and very flexible as well. You've got a petri dish to go and actually get that creative spark and make things happen. So I think DrumG, for full disclosure, is incorporated in Bermuda for lots of reasons, good reasons. It's Bermuda. I mean, why wouldn't you? Yeah. And we kind of saw that as building a global software company, which is what effectively we're doing. It's actually very, very smart to be incorporated in Bermuda for lots of reasons, and that's only because they're pretty progressive about it. So the digital asset legislation just really opens up the opportunity to go and actually genuinely innovate, and I think we desperately needed that, and it's really great to see it actually. Big up Premier Burt.
Could I actually extend that question and ask, what would be next? I mean, we've set the foundation with our Digital Asset Business Act and digital asset issuance. What's needed next for the industry? What's the big challenge that's really stopping adoption at this point?
There's some really core pieces of. I think we approached blockchain in 2014-15. Most banks really got into this thing in 2015-ish, right? That was the fear of missing out kind of phase, when it was much hype. And we started these POCs focusing on really narrow problems and use cases. And I think if you went away and actually built, did a greenfield of what does a financial services kind of blueprint or architecture look like, we wouldn't have done it in these kind of little POCs. I mean, it's still right to do it that way, I think, because you prove out in a particular asset class that it makes sense. But you forgot identity. You forgot, KYC. You forgot the regulatory part. You forgot the cash rail. So designing the infrastructure is quite important. So you're saying that you've built the infrastructure, but effectively there's like three main ingredients, right? You need to know you need to have an understanding of who the person is, which is your whole identity problem. I don't believe that whilst Bermuda is absolutely kind of leading the charge and really showing the rest of the world how to think and how to do it, you can't solve the identity problem for other nation states. They've got to solve it themselves. The second ingredient is you've got to have this understanding of what is the asset, right? So if if we're trading the same thing, we have to. So right now we use a QSIP to figure out what it is, and it's on the screen on Bloomberg. Well, Tim mentioned earlier that we might be moving away from that model. Well, we need to have a way to make sure that if I'm selling you my house, if I intend selling you my house digitally, I don't inadvertently sell you Tim's house because I've described it in a different way. So we need a single global asset registry. Again, it's a problem that Bermuda by itself maybe cannot do. So it's you get the gist where I'm going with it. It actually will end up, and I think Michael mentioned this right at the beginning, about the different regulators and how they're inconsistent about how they view these different asset classes, or whether it be native cryptos, or calling it virtual currencies, or digital assets, as I prefer to call them, which is the securitized version. So the issue there is that until we have some more certainty around how it's going to be treated from the US, how it's going to be treated in Europe, you're going to find institutional clients taking a risk position or taking a back seat because most large banks have received numerous fines over the last 10 years, eroding balance sheet for things that maybe they should have known better about at the time. But you get the... So what can you do better? What can you do to help it? I think what you need to do is you need to get to the US and build out the same type of network that banks are trying to build, and with companies like DrumG, build out that network amongst the different nation states. It's not going to be a winner-takes-all thing, so it's not as if Bermuda's going to suddenly become the economy where everything happens and taken out from the US. There's absolutely an opportunity there, but I think it's going to take you working with other nations, because people are going to follow where the money is. The ICOs, third of ICO money raised was out of the US. You just can't ignore the US. You got to tackle it. But I'm talking too much, but you get the gist.
I just reiterate that, Premier Burt should go and see the Bank of Canada and Monetary Authority of Singapore and set up a working group to look at cross-border issues. There's not a lot of that going on, and it's a little bit. I mean, the Bank of Japan and I think Europe, there was some form of tie-up, but it's not been pervasive. And it's sort of surprising because we were talking about it earlier, they got out of the gate really early 4 years ago, and it's gone a little bit stale. So I think some really targeted cross-border projects that show something working. I mean, that's the biggest limitation for financial institutions coming into Bermuda is it's not operating Bermuda, it's operating with other countries. So start attacking them head on. Let's talk about that.
Or even get some exemptions, right? So, if the person does it in this jurisdiction, they won't get a fine from that jurisdiction. Those kinds of things will be useful.
No action letters.
Yeah.
Absolutely. Thank you. Well, this was great. I love the audience participation. I'd be remiss if I didn't let you all know that Quartz has a twice-a-week newsletter about crypto called Private Key, and you can sign up for a free trial and have a look at it. Our website is qz.com, and if you scroll down, you will find information about it. Thank you again for your attendance. Thank you to our panelists, really engaging, and have a wonderful Davos, everybody.
Thank you.